Hi, Nick Neal with New American Funding. Nick on rates for Friday, May 9th. If you remember past videos, Nick on rates videos, this isn't a good sign. We got Sebastian running into the wall. And that's kind of what we're having happen with bonds. It's crazy because we had pretty uneventful week as far as news. The thing that really tripped us up last week, and we talked about this, was new jobs creation numbers. That nobody was expecting that to be high, and the government release numbers were higher than expected, quite a bit higher. But ADP numbers earlier in the week of the previous week were low. So it's just weird that those two are off, and we've seen that in the past where those two have been off and then they come back and revise the government numbers down closer to the ADP numbers. So we usually really trust ADP more because that's the largest payroll company in the country, and they're the ones that really have more accurate information on new jobs created. So that was suspicious, but it still really affected the market. We've had a good run improvement in pricing on both treasuries and bonds. Heading down here with what you want to see on treasury yields as they go down, interest rates go down, and then we had the unemployment numbers or the new jobs creation numbers come out, and we started this trend up again. And then this whole week has really been news free. There was a little bit early in the week, we had ISM manufacturing indexes come in a little bit stronger than expected, but not too much. And there was some offsetting news that day. This was Monday, Tuesday, that was kind of keeping things level for bonds. The big news was on Wednesday. We had Fed speak that turned out to be not really that big news. They really didn't say too much. Nobody was expecting a rate reduction this time, partly because of the higher jobs numbers that we'd seen. But inflation, again, has been staying in line. We've had good inflation numbers, and up until that point, had really good releases for things that we look for bonds. So Fed really didn't say too much, maybe a little bit more hawkish than we'd hoped for, but there wasn't really anything to push the market. So it's kind of just been technical factors. We've been running through lines of resistance once we started with the new jobs creation numbers and breaking through those lines and coming up to our downward trend line, and actually broke through it. So this is kind of a bummer because we wanted to keep following with this downward trend with rates improving, and it's a random walk. You know, as we've talked about, you can see we do go up and down, and that's healthy and expected, but ideally we wanted to stay below this line, even with the ups touch it, and then create lower lows coming down. And hopefully we'll continue to do that, and we should, because we still have a pattern here moving down, but we did break above that line. And then on mortgage-backed securities, kind of the same thing. We had, the good improvement going on. Again, mortgage-backed securities, we want to go up. That means rates are going down as the price on the securities goes up. And then we had the employment numbers come out, and they turned down, and then kind of bounced around a little bit. We had a couple of really good days, mortgage-backed securities almost coming back up to break through our downward trend line, and then got hit hard with the last couple of days, and it's just really hitting this trend line, running into the Fibonacci lines that are pretty hard to break through. But it's just frustrating because we really shouldn't be seeing this much of a turn in rates, at least in my opinion. So hopefully we'll have some good news next week. The one thing that we did start to do, as you can see, we almost started creating an upward trend line here. We kind of have, and so we've got this downward trend line continuing and an upward trend line with mortgage-backed securities. If we start that up, that means the rates are going to continue up. So we're hoping that's not going to happen, but still really think that the way things are going in long term, everybody's expecting rates to come down. And hopefully this will just be another walk that we see as we come up, that it'll tip and turn and start down again. So not a really good news week for rates. We're still seeing them in the mid sixes, which is good. I'd much rather say we're in the mid fives. It's a lot better to hear that, or fours. It's all relative, but sixes are better than sevens. So we're still making a lot of deals work. I've got everybody locked this month already with the news coming up with the Fed speak. Was nervous about that. So we got 4 loans locked for last week for new purchases. So that was good to get those locked and just not, I don't like to float through things of uncertainty like that. Fed is just, you never know what's going to happen. They can really turn things one way or the other. But anyway, call me, text me, fax me if you'd like information on rates, additional information, talk about marketing. I've got over 300 agent experiences with past marketing and large teams, up to 20 and 30 agents. So can talk about some neat ideas about marketing. And if you need help with financing home loans, or if your clients do, we're happy to do that too. I've got an amazing team. Goal is to get docs to escrow 5 days before closing and always close on time. And we've got a lot of 5-star reviews, so everybody's happy that we're working with. And we got plenty of room on the team for more deals. So Call me, text me, fax me if you'd like to talk more about that. Have a great weekend. Happy Mother's Day.